Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, executives, co-founders, entrepreneurs, thought leaders, musicians, artists, you name it, in the world of crypto and blockchain around the world. And today I have an amazing guest. He's right here from the U.S., where I am. His name is Tony Saliba. He is the founder and the CEO of Liquid Mercury. Tony, welcome to the show.
Hi, Jamil. Thank you very much.
You're very welcome. So let's kick things off. And let me ask you the first question is, what is your background, and is it a logical background for what you're doing now?
Well, I started my career as an options trader on the floor of the CBOE, and a lot of the initial thrust of that industry becoming to the forefront is what is happening here after a decade of digital currencies, basically becoming part of the awareness of a bigger mass or bigger majority of people. And I see a lot of similarities to what we went through in the options business.
What are the similarities?
Well, so they're both very difficult to understand at first. And like those who trade options, some people get into theoretical values and try to understand the model, but then at some point you realize that how the blockchain operates is not as important as what token or what currency you're interested in and how it trades. Each product, when a new entity comes to the forefront to trade it, if they're a large institution, and our company deals as a B2B, those individuals are not just going to want to pull up a website or get on a system and start clicking. They're going to want to talk to somebody who knows what they're talking about. So in options, the agency business, options brokers, if you will, still flourish with voice business 45 years after, or 50 years actually, after the launch of listed options. Same way in crypto. And our solution, our business primarily deals with agents, brokers who have customers, although we do have trading platforms for the buy side or traders, if you will. So that workflow, handling what we call special handling orders that are coming in hot, they're large, they're risky. The investor or the trader would rather hand it off to someone like you or me that knows the business, and then we work the order, and our software facilitates that.
Got it. So you're the first. I didn't say first. I would say that when people say onboarding into crypto is challenging and difficult, that's the minority of people who say that to me. Most people say, "Oh, no, the stuff it's easy." It's not. Right. You have to, it's a shift in mindset. So how did you find your intro and your ramp up into crypto challenging, and what did you do to be able to understand the market and the industry?
Great question. Well, initially we kind of were fooled by targeting crypto native people, if you will, that were, they were fine with doing their own research and drilling down on how to set up wallets and all those things. But for the most part, our client base, which is traditional finance, and those who left traditional finance to join with crypto OGs or native individuals to create companies that really focus on systems that work in terms of security and I mean security in terms of not being hacked, or not losing control of your wallet, or not forgetting your keys and things like that, but also reporting, best execution, stuff that was foreign to early days, first 10 years, let's say, of crypto trading. And we still revere decentralization and trustless platforms, but Wall Street, I'm here in Chicago on LaSalle Street, they want these traditional forms of safety and, I should say, best execution. So what I found was that was a lot of fool's gold, in the first few years. Plus, we had to gear up our technology, which is all rebuilt for digital assets, to handle, going out as many decibels, connectivity to all the different custody platforms, 40, 50 different venues, aggregating all that. But we have algos for that work also, and we make it really comfortable for agents and principals to trade crypto the way, or digital assets. Doesn't have to be your big name crypto securities, but digitized sovereign bonds and carbon credits and all the other things that are being digitized for safety, better accounting, real-time clearing, all the things, real-time transfers that happen with digital assets.
What is Liquid Mercury all about, and what makes your mandate unique in this competitive landscape market?
Sure. Well, following on to the previous, we see a convergence of traditional assets, traditional finance trading, equities and options and futures, for instance, converging with digital assets. The most talked about thing in the crypto space is, when is the SEC going to approve a Bitcoin ETF, right? Okay, so that's going to happen. That's going to necessitate those who trade solely traditional today to have an outlet pass, if you will, a hedge to the spot, or other surrogates, perps, futures, even digital or crypto options, okay, on one of the multiple overseas venues. Our platform puts that all in one place. So you can trade the ETF through the broker-dealer of your choice and the digital asset, and we have algos that help hedge that, keep those relationships in line any way the trader wants, or work those orders as an agent or a broker for its clients. And nobody else is doing that today, Joe.
You're using algos. That makes sense. And the tokenization of real-world assets is coming, right? So,
amen. On that note, Jamil, once that happens, the tokenization of equities, which has been being worked on for a number of years in a number of different areas, but it's going to happen. DTC just acquired a digital company for their own usage. That's going to happen. Then this crossover will be pure and happen for sure. I think that's a little ways out, maybe 1 or 2 more years for some equities to be digitized. But the digital security space with these ATSs being approved, they're starting to get their act together for the tokenization of securities. Like Prometheum, for instance, T0, which is a ICE property now, for the most part, INX. I mean, there's a number of them out there. They have to tweak their models properly. I mean, Prometheum is just getting their approvals, but the others have to tweak their market structure and pricing models to make it much more efficient for people to trade. It's still a little too expensive in our opinion.
Okay. INX, I know Renata.
Wonderful. Yeah.
I met a Promethean guy once. Kind of, I was at this conference where Renata was at with the Global DCA, and the Prometheum guy's on the stage, and I don't remember his name, but he's talking, and I'm like, this kind of like goes against everything that I've learned in crypto so far. Like it's different, right? Now I've talked to a lot of people where things are different, but people are going to have to go from transitioning like Chicago, like bonds and stocks and other traditional assets to crypto, right? How are you looking at the analytics for first and foremost, analytics? What's the commonalities and the differences? People need to take up on that. And then the personality trade differences in order to trade.
Right. Well, okay. So on the analytics, so we really focus on options analytics, and the models are quite similar. The volatilities obviously are crazy wild, and it really depends on which underlying you're going to look at. So in terms of being able to use a traditional platform for options and just start trading crypto options, you're going to have some problems in a couple different areas. First of all, a lot of these options are quoted in the underlying terms, so you have to convert. So Bitcoin calls are being quoted in Bitcoin terms, and then you have to convert them back to dollars, right? If that's what you want to do. Also, you have to go out at least 8 decimal places. We go out to 12, and then you have some granularity issues. But we've navigated that wonderfully. So our clients who come from the traditional space feel very comfortable getting a platform that they're used to. The look and feel might be a little different. You have different watch lists and things like that. But depending on whether you're a principal and you need these analytics for your own trading, we allow you to plug in your own analytics. Or if you're a OTC trader and you have customers you want to promote your prices out with analytics, because some customers want to see a price and a delta, we allow you to do that too. So we become a B2B2C in that case. So we're all about trying to make the transition comfortable, even to where you can trade the listed stuff on the same screen.
Okay. And how about the personality? Like if you're a successful equities trader, right, or options trader, and you go into crypto, you might have this expectation that you're just going to be a great trader there too, but you're not. Most likely not. What are the first you need to be able to?
The first thing is the obvious thing. Unless you're a FX trader, this is 24/7, brother. So and I traded currencies, FX in the mid 80s, and I didn't get any sleep for the 2.5 years that I traded because, I had one eye on my Kotrek while I went to sleep to see if dollar yen was going to move. So this is 24/7. Individuals have a little bit of a harder time unless you're just swing trading and you're flat, or if you're long-term investing and you don't care. There are different trades that happen, for instance, Sunday night, overnight before the European market opens Monday morning. So you have that issue that there isn't a closing bell. And I know that stocks have after-hour trading and such, and they're moving to a 24/7 or 23/6 marketplace, but that's already what we have to deal with supporting these systems for our clients around the globe.
You mind if I give you a hint?
Yeah.
During the bull market, the Ethereum gas fees are cheapest at 3 a.m. on Sunday morning.
There you go. 3 a.m. Sunday morning. We have one client who says she trades Sunday, overnight Sunday, and I thought it was Sunday night to Monday morning, but that's probably what she's doing, Jamil. It's overnight Saturday to Sunday morning.
Yeah, I have no idea why, but hey,
a follow on your question on the personalities. So that is a big factor, but also the aspect of the market data is a little different. Okay, it's gotten quite up to speed or quite close to what we're used to in trading equities and options, but the tick data isn't 100% there. So depending on what kind of analysis you're doing, you're going to be flying a little blind in some regards. And then also the liquidity, depending on which tokens you're favoring, the depth of market beyond the top 5 starts to get a little sketchy from time to time. But then there's also these rushes where something will get popular and there'll be plenty of liquidity. I'm reading that the meme names are starting to come, meme tokens are starting to come back into favor. Is it a gambling session or a greater fool session? I don't really know. I think some of these altcoins were babies thrown out with the bathwater. and that's not fair. And they have some real meaning to them. And I think we're getting in a position now where they're all going to get popular again for a while.
So there are various crypto, I guess, trading opportunities available today, and then there's going to be a spot. Apparently, there's going to be the approval of a Bitcoin ETF, spot ETF, or legislation that could affect these trading opportunities. So, what are the trading opportunities, and how will legislation affect these?
Great question. Because we're all sitting on the Fed, SEC, mostly Gensler, coming to his senses and giving us rule sets and playing surface rather than us running around and then having them drop a flag saying you're out of bounds. And this is regulating by enforcement. But we didn't see any lines. How do we know we're out of bounds, right? All right. So for institutions, which is what we deal with, and when I say that, what I mean is companies, as opposed to, the sole prop that might have 50 or 100 grand in his account or her account. The opportunities are arbs between future and spot, and perps and futures and spot. And the legislation would be the first step towards some cross margining. Now, our system will margin anything and cross margin if a rule set is in place. And MiCA in the EU is giving us an opportunity to do that and taking a toehold. Most of our clients are EU or in Asia. And with the US getting a rule set and actually laying, pick your sport, baseball, football, basketball with the line, where's the foul line? Where's, the baseline? You can't really play any of those games or do any of that business without a rule set that says you can go hard because you're in the lines versus, oh crap, I thought I was doing the right thing. And then they drop a flag on you because no, we're looking at that as something different. So getting the laws and the regulations set are going to allow us to play these ARB games or strategies. I mean, covered rights and, various volatility plays. You have to be overseas really to take advantage of stuff with options. That's coming here soon. Look at what the exchanges are doing with their, CBOE Digital and MIAX owning the Bermuda exchange and the chances of that becoming a crypto, a digital exchange. So the regs are going to really make a big difference on that.
And when do you think the regs are going to come?
Well, I have my ear to the ground. I have people in Washington that try to keep us up to date. Depending who you talk to, the pressure is there. I mean, look, there's a number of different things. One is there's a missed revenue opportunity for this country. I mean, come on. Why would we not want to build these businesses here? The amount of money the exchanges, the equity exchanges, the options exchanges, futures markets pay to the government is enormous. They're missing this opportunity by setting the rule set that allows Americans to trade digital derivatives in the U.S. jurisdiction. So some of the pros are really easy to understand. Cons are that the federal government might see Bitcoin as competition to a digital dollar. And they, probably don't like that because they don't have control over that. Just saying, right? I mean, if your power comes from legislated activities, you're probably gonna not want to give the rights to this asset class that only your dollar has. So what I'm hearing is that they're going to ease in some respects and approve more than one ETF in the next 6 months. So Sooner the better, and then watch the arms race, get people getting ready to trade these. By the way, in 2003 or 4, I was involved with GLD being launched. The lead market maker of that of GLD at the time was Bear Wagner. They were a client of ours. I sat in on strategy sessions. There were a lot of naysayers that said, "Oh, GLD, a gold ETF isn't really going to, mean anything." Whoa. I mean, were they wrong? This brought gold to the common man and woman. And I see the same thing happening for the first few Bitcoin ETFs that really, are on the spot and listed.
Interesting. Yeah. You said this arms race is going to be on. Everybody wants everybody to hurry up, the SEC to hurry up and approve the ETFs. And I'm like, I want them to wait just a little bit longer because I'm not done accumulating yet.
Well, from a personal standpoint, I think you'll be okay. Yeah. I mean, we're getting calls from large companies that don't have solutions in place yet. The FTX situation put a pause on a lot of decision making. Nobody flipped the bird and said, "Nah, we're not interested. We're not going to be in that asset class," but it did put a chilling effect on decision making. Now that's changing, where there's inbound saying, "Can you do this? How fast can you do this?" And that's kind of arms race that we're seeing. But I think, I don't think you're going to see anything approved before the end of the year. So I'd love to be wrong, but I think it's going to be in Q1 or 2.
I hope you're right. So what do you see as the greatest crypto issues today for traders, and as well as the future direction of the industry?
Well, besides the regulatory ambiguity that we're living through, margining issues, proper prime brokerage. So you have hidden road that's way out in front. You have velocity clearing, which is making moves in that area, which I think they plan to be able to be able to hold digital assets and traditional assets. I know Hidden Road's doing that, and they're definitely way out in front, but they're based in the UK. So prime brokerage, regulatory situation, and then the current systems where retail people can enter some orders, that's fine, but for the day traders, they need an upgrade in their platform, and that I think that's right around the corner. But those are, three of the bigger challenges.
And do you offer that upgrade?
We do. We have a solution. We're partnered with Gemini, and they do the onboarding, and so they'll do the AML and KYC. So it's fine for U.S. citizens. And they'll do custody, but you can self-custody. They'll do the clearing, and then you use our platform for execution, use our platform to hit our OTC broker, so you get a deeper, tighter market. And then you have our platform that has those tools that I say are missing in some of the other retail. Let's make it crypto, but it still looks like Apple, type of trading tickets and things. It's a whole different look and feel, and allows for individuals if they have we're a B2B, so if they find one of the entities that uses our platform, Stocks to Trade is one, DTI is another one. We've got a few in the queue. But if anybody's really curious, they can go to liquidmercury.com, our website, and inquire. But that'll be coming soon to a lot more firms, because Apex closed down. They had a lot of these tools, although they didn't have the front end and analytics that we offer.
I asked because this industry has had a user experience problem, you know, the whole entire time. So I thought it'd be important to find it to figure out how you, or you know, improve their experience. So,
I, you know, I do a number of podcasts throughout the year, and you're the first one to ask or to mention that. It's like the dirty little secret. It was e-commerce, basically. The UI, the UX was good enough, and these guys provided a lame approach to accessing, but it was good enough, and they made a lot of money. They charged a lot for this stuff. And then there's a few firms like ourselves that have come along. Now our competition doesn't have an individual solution. Our real competition is B2B. They don't go out to their customers. So we'll white label for a firm that has individuals, even if they're high net worth individuals, day traders, or RIAs that have been approved to trade Bitcoin, for instance, and there are those out there that do exist, to upgrade the experience to be very professional, even if you're an individual. And you're like the first guy that's actually voiced that, besides people on my team.
yeah, so it feeds into my next question. I had that, you know, about your thoughts on the future growth of the client base of the crypto industry. You know, you need to bring in institutions, you need user friendliness. So what is your thoughts on the future growth of the client base?
Well, so I don't know what the exact percentage is today. It's in the low single digits of adoption by investors, depending upon the jurisdiction. I'm just talking about the US market. They say less than 5%. And here's the divergence, Jamil, and that is it less than 5% that actually hold a digital asset in their holdings or that have ever tried it? So I know that number is going to explode. And if you look at EDX, which is the consortium of two big competitive powerhouses of Fidelity and Schwab, teaming up with also two competitor powerhouses of Virtu and Citadel, to create a marketplace for the individual investor to have access to these digital assets. Primarily, I believe Bitcoin they're starting with, and maybe ETH and Solana, but still dip your toe in the water. So there's demand. There's demand at banks, because banks that we talk to say they not this quarter, but like a year ago and earlier this year, they saw outflows to Coinbase, Kraken, Gemini from their deposits. So there's demand, there's curiosity at a minimum, and there are other pundits saying, I mean, even older guys like myself, if you listen to Paul Tudor Jones and Stanley Druckenmiller last week, said, well, Bitcoin's the Gen Z and millennial version of gold. Okay. Difference is you can mine gold, and Bitcoin is finite. So there's a scarcity issue that the dollar doesn't have, right? And that's a good thing for those who hold it. Is it going to be a storehouse of value? And the powers that be tried to beat it up, first tried to make it illegal, then tried to, beat it up with moral suasion and rhetoric. And now they're trying to, if you can't beat them, join them with FedNow and the digital dollar, if you will, or the tokenized version of the dollar. And I think that more awareness and awakeness is going to happen. So the future is that it's going to grow tremendously. I'll give you really one quick little vignette on the options business. So I started in the options business in 1978. So 45 years ago, almost 46 years ago, I came down to the floor. And a good day, there was 4 exchanges. On a good day of volume, and like a really big day of volume, was a few 100,000 contracts. We rarely touched 1 million contracts, and that's all 4 exchanges combined until the mid 80s. Okay. And everybody's feeling pretty good. 1 million contracts. Wow. But that would happen, a few times a year. Then about 5 years ago, pre-lockdowns, we were in the teens of millions. And people were like, okay, this is the golden age of options. Boom. Crisis happens. Volume spike. 20-some million contracts a day. And I have a partner that said, you guys better take advantage of these days. We're not going to see 20 million contracts a day for very long, and then you're never going to see it again. And God, was he right. Now we're doing 40, 50 million a day, never to see 20 million again. And Susquehanna, who's a big trader, big market maker in the space, recently, a friend of mine that works there said, we think options volume is going to double over the next 3 to 5 years. Who would have thought of that? Options. It's a beautiful thing. And you can trade options on crypto, and that begets more volume in the underlying. So yeah, it's going to explode.
I'm going to say a magic number here. Get your thoughts on it. It was just a volume so high, and you're trading options. What are your thoughts on 100x?
100x for option volume? Wow.
Yeah, option trading for returns on your investment.
Returns on the investment. Okay. Well, that's a big one. I mean, I just had lunch with a guy who looks for 50x. Okay. And they've been on the ground floor of a number of digital asset ventures that they've been successful, but 100x. Wow. To do that, and it's out there, you need to find a startups token that makes sense. Okay. Something that is, and really the only way I think you can do that is there's 2 ways to do it. You either have to be plugged in and do your research and be in the know with some of the other VCs and such, or there are bots that do this. When we listed our token, all of a sudden bots just came and started buying, because anything under a penny, they just had little triggers to buy $500 worth or $5,000 worth. And we're like, whoa, who knew about us? We kind of snuck into the market, and then boom, there was trading. And then I realized, okay, they're just bots getting on board of something that is under a penny and has the chance to go to 50 cents or $1. That's one way you do it. Or you meet a guy or gal that's working in their garage and you get on the ground floor of their startup, right? So, our token is still under a penny, but barely. That's the MERC, trades on Uniswap and a number of overseas exchanges. But do we think it'll go 100x? I don't know. I would never say that that's the case, but could it go 20x? Yeah, I mean, 100x would be pretty nice, but God bless you if you find that, brother.
You too.
Yeah.
All right. So I'm going to ask you this one. I want to get your take on what your top 5 predictions for 2024 are.
Well, we touched on a couple. One, I think that a Bitcoin ETF will be approved. I think you will see firm movement signaled, if not legislated, by the U.S. government to give us a better playing surface in the digital asset space. Okay. I think this is an easy one. I think Bitcoin will trade higher. I'm not going to say whether it's going to stop at 50,000, 100,000, or 200,000. I've seen those predictions, but I would tend to think that it's going to be closer to 6 figures than it is today, much closer, maybe even surpass 100,000. I also believe that digital securities will trade actively on an ATS. Right now, they're a bridge. These ATSs are a bridge to nowhere because they raise capital and then their secondary market is out of step with pricing structures of traditional markets. In other words, it's too expensive because they need to understand that investors do want to only buy and sell hundreds or thousands of dollars worth of transactions, not $100,000 notional. So the fee structure is too big of a percentage of the traded notional. And so and the Americans will get a new president next year.
We should.
I'll bet on that.
I don't know who it's going to be, but we should, right?
I don't know who it's going to be, but I just think the current one is out of gas.
You know, I have one. I'm probably getting in trouble for it. I want to get your thoughts. And you know, you had a letter from Elizabeth Warren and 100 other lawmakers saying that the U.S. dollar was, or that crypto was used in the funding of the, you know, Hamas. And then you know, and she was wrong. And a lot of people on crypto Twitter thought she was wrong, and she likely was. You know, and she definitely was. Facts proof. But in the same week, Cynthia Lummis, who was a senator in Wyoming, said that went against Tether. She said some negative things about Tether, and I'm like, you having negative things said, but both parties on both sides against crypto, yet they're looking at the proliferation or the creation or a distribution of a U.S. Fed dollar, right? Are both sides in favor of this Fed dollar? Are we going to see that? What do you think?
Well, okay, so great juxtaposition of a number of different competing thoughts, and they're all duplicitous. And here's why. Why do we need a CBDC, a Fed digital dollar? Okay, now they're going to tell you that it makes it easier to do transactions. You don't have to have money on you and all this ease of access stuff. Okay, some of that is accurate, some of that is overdone. But the reality is it's control, okay? Now, I'm going to interrupt myself and skip back to your first point, Jamil, and that is about what is being used to fund Hamas. What is used to fund human trafficking and drug deals and illegal arms? I have this debate with my children regularly. Are you kidding me? The number one thing that is used in those issues is the U.S. dollar, okay? So are you telling me we didn't have those aspects, human trafficking and illegal arms sales and illicit drugs before 2009 when Bitcoin was launched? Stop it. Now, the smarter legislators will say, well, but Bitcoin facilitates it. Really? Okay. Well, you haven't been able to stop it with the US dollar. The only thing that digital currencies bring to the table is that it can happen faster and actually cleaner. And you know what? If they did their homework, they can do forensics. It's on the blockchain and find out these wallets and do something about it. And that's why they want a CBDC, because they want to control how you spend your money, where you spend your money, when you spend your money. It's like EVs. Are you kidding me? They can shut down a grid and prevent you from leaving a jurisdiction. It's all about control in the digital dollar. So when Elizabeth Warren comes up with all this stuff, I don't know if she's BSing for a political reason or she's just that out of the know and ignorant. Her staff needs to educate her. As far as the senator from Wyoming, I didn't see what she said about Tether, but there are issues with Tether in terms of, do they have a proper amount of deposits on hand? That I'm assuming is the case, but there's a lot of duplicity when they say, well, digital currencies are bad because bad people use them. Okay, look to our own fiat currency first. Thank you. And this is not new. I'm not telling you anything new. I'm just amplifying what you already are thinking and your audience is already knowing, right?
Yeah. I'm just wondering if we're going to see a digital dollar. I think we probably are.
Yeah, here's what I think is going to happen. And this will be, I only gave you 4 predictions. I'll give you my 5th prediction. That some of these states, predominantly red states, that have already moved with legislation to outlaw a federal digital currency, some of them will move to use belt and suspenders approach by coming up with their own statewide digital currency. Okay. In other words, if there's a hole in the dike, I'm putting my thumb there first before the feds come around and say, we're going to control the water supply by putting our thumb in the dike. So if the digital currency is adopted, there's a number of states, Indiana, Florida, Wyoming, North Carolina, Texas, like 18 or 20 states have already passed legislation on the heels of that. And I know one for sure that I'll leave unstated is trying to launch their own stable token to get their populace so that they can just say, you know what, we're already digital. It could be tied to the US dollar. We'll keep those dollars in reserve, but you don't need to bring, and here's why this could work rather than the Fed now CBDC. And that is, this state is claiming they will prove to their citizenry that it's anonymous, that you'll use it for purchases, but we won't know who you are or any of your own personal data to be able to track that or control your spending. And if they succeed with that, that will fill the gap. And the citizenry will say, Fed dollar, we don't need it. And I think the Fed will fight the legislation and say that the legislation isn't constitutional, but if it's in practice, that could make it that much harder to rip it out.
Interesting. I think this is going to be a next fascinating bull cycle.
Right? No, I think the state that I'm thinking about has got a really good head start. They have all the legislation passed. They made moves with their infrastructure. And if they succeed, they will be a beacon for the other, model for the other exchanges.
Awesome. I'm looking forward to this next bull cycle. I think I'll stick around for a while. So, with that said, I have one last question. I want to thank you very much for your time today. This has been a wonderful, amazing conversation. I enjoyed it. And my last question is probably easy compared to everything else. It's how can people find out more information about you, about Liquid Mercury? How can the institutions out there become a client of yours? How can they do that?
Thanks, Jamil. Well, our URL is simply liquidmercury.com. We talk about our solutions there. We have our tokenomics for the MERC there. We are very interactive, even with individuals. We'll answer questions personally. We also do options training too. So people who have a bent to learn both, we are very interactive with that. So liquidmercury.com. I'm also on LinkedIn, Anthony Saliba, and happy to engage. I've been in this business for a long time. I love the volatility of cryptocurrencies. They're perfectly suited for options, and that's our goal, is to evangelize in that regard, and hopefully with our solution too.
Awesome. Thank you very much for your time today.
Thanks, Jamil. It's awesome. Thank you very much.